Hey, just wanted to take a moment and go live here and just share some numbers that I was walking through with a client. So we are getting some requests right now for refinances. Most of them are cash out refinances to pay off other debt. And so I wanted to walk through these numbers because normally when you're thinking of a refinance, everyone's just thinking of payment savings, but we can actually use the mortgage as a much more important financial tool to help restructure debt and eventually actually pay off the mortgage a lot faster. So let me show you what the numbers from this client here. Okay, so the current loan, she owes values about 425. She owes 265. We did a refinance for a couple years ago at 2.875. So she's got a 1123 principal and interest payment. She reached out because she's helping some family with some illness, hospital bills, things like that. And so she'd like to cash out about $27,000. To do that in today's market, based on her situation, we would increase the loan to 297. The new rate today without paying points would be about 4.5%. So that can be a hard sell and may not make sense on the surface because the payment's going up $380. Okay, but when we look at the whole picture, not just payment and rate, then we can start to see what are you doing with this cash. So she's paying off a couple of credit cards, about $27,000 that have payments of about $750 minimum payments. She's making larger payments than that, but minimum payments of $750. Okay, so when we take the 750 payments that will no longer be there, so let's call that the monthly savings, we then subtract $380 of payment increase on the mortgage, she's left with about $387 of extra money at the end of the month. Okay, so what do we do with that? She can do whatever she wants, of course, with it. But my job as a mortgage advisor is to show her maybe some things that she had not thought of. So this third column here, I'm showing her what happens if you just take the $387, apply them towards the new mortgage. Okay, so essentially making the same minimum payments that you're making now. If you do that, your new 30-year mortgage, which she is about 1 year into her current loan. Okay, so this new 30-year mortgage gets paid off in less than 20 years. So just by taking those additional savings, applying them towards the loan, she can save 10 years off the loan, which is about $140,000 of mortgage payments that she will not have to make at the end of the day. Another strategy would be to, if she's working with a financial planner or make a connection to a financial planner and said, okay, what if instead of sending it to the bank, what if you take that 387 and invest it in this fourth column at a 4% rate of return? I'm sorry, I did a 7% rate of return, which pretty conservative as you talk to financial planners over any kind of a long time horizon. If she does that, that money will grow, interest would compound on it. And in 18 years, she would have enough money to pay off the mortgage. Okay, so she would shave almost another 2 years off strategy number one. So these are just important things that we go through with every client because it's, this is the largest debt of their life, and the mortgage can be used as a financial instrument to help put together a better future, not just look at what the monthly payment will be. Let me know if you have any questions and if there's anything we can do to help you. Have